Thank you very much, and welcome everyone to this session on AI and regulation in insurance. My name is Ansgar Koene. I'm the Global AI Ethics and Regulatory Leader at EY. We obviously do some work in the financial sector, including some advising regarding how AI is being used in insurance. But much more importantly today are my panel members, Janthana and Robert, and I would just like to ask both of you to introduce yourselves. So perhaps Janthana, if you would like to start.
Yeah, thank you so much. My name is Janthana, and I'm one of the co-founder of Tapoly, which is an insurtech company based here in London. We provide technology solution to insurance industry, as well as in the UK, we have our own license. So we are licensed as MGA, and we sell insurance product to consumer.
Rob Moorehead-Lane. I'm currently the CRO for Aspen Insurance across Europe. I've done 30-odd years in financial services in the Big Four and in a number of different insurance companies on the retail and commercial side around the world.
Great. So we'd like to try and make this an interactive session to the extent possible. So I do have some questions prepared for the panel, but I would like you, if after any one of these questions you feel like you'd like to do a follow-up or something like that, please do feel free to immediately raise your hand. Don't wait until we get to the end of the prepared questions. So to start off, first of all, in the kind of policy discussions, when people are talking about AI, there's a tendency to be quite vague, actually, in what is being included within the term of AI. It's not just focusing on machine learning or even other specific, like reinforcement learning or other kinds of true AI kinds of methodologies, but often they include advanced data analytics, robotic process automation, and other kinds of methodologies. So from your experience, first of all, how prevalent do you see these different kinds of technologies being in the insurance sector? And also, how significant would you say is the actual difference between these when it comes to the question about the issues that the regulators are actually interested in? Please, Janthana, you can start.
Yes, I think all of this technology that you just mentioned have one thing in common, which is data. AI is driven by the quality, data, and therefore, I think from the regulatory standpoint, what we have as a common theme is GDPR. So that's how it's, you bound all of this technology together from the regulatory risk perspective. But the technology, of course, in itself, is very common, especially in my line of business. We specialize in commercial liability insurance product, which I think AI is probably one of the most common use in our line of business.
Okay. Robert?
I think that one of the challenges for regulators and for firms around the world as they start to develop automation and AI solutions is around the differentiation between the product and the data that's available. So when you're looking at automation and data, making decisions about that is always very difficult because of the privacy and the impact of the decision that's being made. So if you're going to regulate AI in premium pricing on health, there's going to be a very different impact on an individual maybe than it is for a car insurance or a home insurance, where it's much more structurally environmental. It's very personal when you're talking about somebody's health insurance. So I think the regulators have got to be aware of the impact on individuals. They've got to be aware of the data that's being used, how that data is being used. And I think primarily firms have to be very aware of what data they are relying on to make impactful decisions about their customers. And I think that's going to be a real challenge for regulators and firms going forward, is how do you justify the decision-making process to ensure that customers and individuals are not being detrimentally treated because of a particular issue in the data. And that's one of the things that I think the industry is going to be challenged with, is making sure the data is clean enough for AI and automation to be able to make the right decisions.
Right, very interesting. So at the moment, there is a growing discussion around, we need new pieces of regulation in order to deal with this growing use of AI. Obviously, the AI Act has attracted a lot of attention on that, but also on the UK side, the government is talking about coming out with a white paper to lay out the landscape around AI regulation coming pretty soon. But if we actually look at the GDPR, back in 2018 already, it has an article, Article 22, that refers to the use of automated decision-making that has significant impact on individuals. And actually at the time, there was quite a bit of discussion around how this clause might impact the potential use of AI and similar kinds of methodologies. From your experience, it's been almost 4 years now since the since the GDPR came into effect. How much has Article 22 actually impacted the way in which you operate? And has anybody ever come to you and raised the issue of, I would like to have my decision reconsidered by a human because it was an automated decision-making kind of? To what extent has this article ever really come into practical consideration for what you've been doing? Janthana?
I don't think we're even there yet. And the reason why I'm saying this is because we are in the process of collecting more digital data. So we are not even at the stage where we can say we've got enough data to even play with. So, like in terms of having AI rule-based decision-making, it's not something that within my line of business we are using. So we're still many years away from being able to do that yet.
I think I'd agree. When I look back on my consulting days and looking at the industry as a whole, when you look at automation across the industry at the moment, particularly in retail, 90% of it is effectively algorithmic automation on claims analysis and claims decision making. And realistically, what are you trying to do? You're trying to break out fraud, you're trying to break out fraudulent claims, enhanced claims, or claims inflation. And realistically, that is not something that is detrimental to consumers to a greater or lesser extent. I think, as Janthana said, the amount of data that's being utilised right now is quite small within the insurance industry. The insurance industry struggles with legacy systems, bespoke products that are differentiated by 1 or 2 data fields sitting in legacy systems. The difficulty of bringing those into a single system and a single data repository, combining data fields, combining different sets of data where seemingly homogeneous data sets could be actually very, very different when you look at the output of the product and the development of the product. So it's very difficult to get a significant amount of data that you can then utilize AI to develop either marketing or sales or premium prospectus. So I think the sort of more generic products are moving that way, but I don't think they're there yet. I don't think Article 22 really has had an impact in the financial services yet. For insurance, I think when you look at things like loans, financial products, retail banking, where there is a significant amount of homogenized data, they're probably further down that road. But insurance right now is far too bifurcated for it to be useful right at this present moment.
You've both mentioned that the collection and the access of data is still one of the main focus areas towards building out the use of AI and similar technologies in the insurance industry. Now, GDPR obviously is seen as a potential regulatory hurdle towards being able to get access to this kind of data. And in its discussions, beginning last year, the UK has been exploring whether or not to amend the UK GDPR to make it easier to overcome sort of the consent or the lawful basis kind of requirements in order to be able to access some personal data. from your experience, how much do you think GDPR has actually been sort of the block to being able to get the kind of data that is necessary? And also, what is your assessment of if the UK were to make some kind of changes to this aspect of UK GDPR, would that be a net benefit because it might make it easier to increase sort of the momentum for innovation in this space, or would actually the potential challenge that arises from this kind of a change towards being able to also operate in other countries in the EU and also somewhat beyond be the bigger problem in that kind of space? What are your thoughts regarding simplifying UK GDPR?
I think as long as we have GDPR, simplification in the UK will be difficult. And the reason why I'm saying is because what we need as an AI technology provider, we need a standardization that will allow us to be able to internationally market ourselves. There's no point in having different variation of AI implementations, because you want to have one size that fit all when it's come to tech, because all our clients have global presence. And as far as the tech business is concerned, it's not a regional business, it's a global business. And therefore, I think we need to have some sort of a standard, and GDPR is by far one of the strictest private data regulations out there. So if you set us yourself to be able to be compliant with GDPR, then you more or less going to be able to comply to all the other regulation out there. So I would see that as a kind of the benchmark of where you should project your technology to be able to meet all the data privacy requirements.
Mm-hmm. Mm-hmm.
I think that the challenge with tampering with any national regulation is, as you just touched on, the globalization of the industry and the globalization of the world these days. When you look at organizations that are moving to the cloud, borders exist for political and national reasons. They don't exist for business really anymore, and haven't for a long time. So as a consultant, I worked on Solvency II as a classic example, a piece of European legislation that came out. However, within a year, 90% of the world's large financial markets had to become Solvency II equivalent because of the regulatory requirements. When you look at GDPR and data, the transfer of information internationally to data centers, to servers, global systems that use the single source of data is the bigger hurdle. And it goes back again to the legacy data. So you've got systems where trying to extract the data and then anonymize it to transfer it into a data pool that can be homogenized is the biggest challenge that people have. So I had a company I was working with many years ago. Their primary policy admin system was still written in COBOL. I mean, I don't know a data scientist who's going to graduate this year who's even heard of COBOL, let alone could still code in it. So how could they get the data out of that system, anonymize it, and put it into a data pool that would be useful? Legacy systems and transfer of data internationally into data sets are still the biggest hurdles to the industry. It's not data privacy regulation.
So, within the discussion that we just had right now, both of you already mentioned the importance of being able to operate cross-border, the importance of being able to think about international data flows and those kinds of aspects. Now, not just on the level of data flows, of course, but on quite a number of broad regions of the regulatory space, countries generate their own regulatory requirements. How much of a challenge do you see there actually when you're operating, and especially when you're thinking about how to implement an AI or similar automated data analytics kind of a solution? Is the challenge due to this kind of lack of harmony between different countries? I'm thinking also of the continuing focus at the EU level to try to harmonize the digital single market, and then sort of moving in the opposite direction, what we're seeing in the US with a kind of splintering of the data privacy regimes, for instance, within each state moving in a different kind of direction. So how big of a challenge is it to you when you're thinking about implementing AI kind of solutions that you see these differentiations in the regulatory requirements?
From the technology standpoint, that's no different for us. Same technology is used, same modeling is used across regions. But what will be a challenge, the data that you collect. So some product may require certain set of data that are publicly available, but in other countries isn't. So in that instant, then you may need to make some marginal customization on some of the questions set, for example, for insurance, to make it very specific to the local. Whereas in some region where the data is readily available, you can improve and enhance your technology much more, because the data automations and other kind of data requirement would already be something that we don't have to worry about. But if from the regulatory standpoint, as my point earlier, if you set yourself to the highest standard, which is GDPR compliant, then you would know that your technology would be able to comply to all the regulation across the globe. So that's one way of doing it. But of course, it's not ideal if your competition could source more data. Ideally, you want to be able to lower your the regulatory requirement internally, so that you also benefit from having that level of data set.
Mm-hmm. Yeah, I think I would say it's probably a three-part question. I mean, I think the fragmentation of data requirements around the world, as far as legislation goes, is one thing. Just from a risk perspective, and from a global risk perspective, by the way, it all means nothing when you start talking about 5-10 years down the line and we start getting into quantum computing. At the point that quantum computing becomes a feasible, viable option for anything outside of the research platforms, all GDPR regulations are off the table, because none of them will continue to work. The biggest challenge for data and for individuals is really around not the technology, and as Janthana quite rightly said, you can build a technology that is suitable for any data regulations around the world right now, and the technology can be compliant with those. It's the data transfer and the data collection and the data manipulation. If you've got the benefit of consumers in mind, why should you not be able to use data to make products, pricing, and claims decisions better for a community of users? The challenge is that what we're going to end up with is companies spending far too much money trying to work out which rules are changing where, then work out who's allowed to be in which data pots, and then work out who's allowed to benefit from which pieces of technology. And actually, some of the regulation can then end up being counterproductive, because you could end up with technology that can benefit consumers as a whole, but actually some consumers are not allowed to be put into that pot of data to allow them to benefit from that.
If I can just briefly follow up on this idea about the pot of data on the whole kind of point. At the EU level, there is now discussion around sort of the Data Act, and in order to try to create more of these types of data sharing pools. Do you, first of all, think that the way that it's currently being positioned will work? And secondly, do you think it would generate the kind of benefit that they're thinking about, which is to say, especially to benefit the smaller players in order to be able to access the kind of data that currently they can't get, but the larger players can get? Or will it not actually manage to address this kind of access to data problem? Just a quick speculatory thinking.
Yeah, that's a challenging one. I mean, Whether regulation helps smaller players or not, I don't know, as much as actual technology and the cost of storage and the cost of data access, the cost of cloud access, and the cost of the technology, which is coming down rapidly. I think that's allowed smaller players, and we've seen it with the explosion in the insurtech market. I think the homogenization of data requirements and data legislation might help in some industries. I'm not necessarily sure it will help in insurance to a greater or lesser extent. I think where you've got commoditized products, phone insurance, car insurance, home insurance, stuff like that, collating data is only really as good as understanding your processes, your decision matrices, and your economies of scale and your selling points and your unique selling points and what you as an insurer are trying to put out into the market and what you're trying to benefit from in the market. If you are a high net worth insurer, if you're going for the high premium consumer, having a set of data from a Tesco underwriting or a mass market underwriter is not really going to be much use to you. So I think, again, it comes down to exactly what the industry is that you're looking at. And I think there are many industries where that data can help. I'm not sure necessarily that insurance, because of the many spread of players across the spectrum, I'm not sure whether actually allowing everyone to see the same data would help.
Janthana, do you have any thoughts on that point?
I think certainly the more data that could be shared, the more you can trust the data. Mm-hmm. I think, to my point, blockchain, the classic example is blockchain, where the data consensus and the fact that people have the same level of visibility. So that's will help with the trust, but practicality. From the practicality standpoint, I kind of agree with Rob, to be honest. I don't know whether there would be much of a difference if we can share the same level of data. Because from our perspective, we want to use different data set, more granular data set that other cannot, to gain the competitive advantage. Mm-hmm. But if everyone have the same set of data, same volumes, then there will be no competition there. Yeah. Mm-hmm.
So moving to more sort of the very algorithm kind of oriented piece of regulation that's being discussed, the AI Act. Obviously, the focus of the discussion around AI Act is around the high-risk applications, because that's really where the majority of the compliance requirements are going to lie. Now, the way in which high risk is being defined is in two ways. One is whether effectively your application is related to the safety of the system, and it's a system that was already in a highly regulated space, or alternatively, whether the system falls within the set of particular kinds of use cases that are listed in so-called Annex 3. Now, within sort of the category around that impacts on the financial sector, previously, when the Commission published their version, it only listed access to credit. More recently, in the amendments that the Council is discussing, they added insurance and specifically systems intended for premium setting, underwriting, and claims assessment into that kind of category. First of all, what do you think motivated the Council to think we need to be adding insurance into this? And secondly, do you think that applying high-risk regulatory compliance is going to have the desired impact that this whole AI Act is trying to do, which is to say to increase people's trust and interest in using services that have these, that utilize AI? Janthana?
I think my first observation, or at least my personal opinion on this, could be that the Council want to avoid any kind of systematic bias that come with, like using AI to make certain decisions. And so that would be my kind of first observation.
Mm-hmm. 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 I mean, I think when you look at high risk, there are a whole host of different levels of decision making within the insurance industry in 3 key areas. The decision to underwrite a risk or not, the decision what price you're going to determine that risk is worth or not, and then the decision to pay the claim or not. And I think when you look at the insurance industry right now, you've got some headline makers who are using some AI, and I wouldn't really actually say it's AI, it's algorithmic decision making, which is based on very standard decision trees. So you look at people like Lemonade and others who are paying claims immediately. Basically, they've looked at the claim form and they've seen that everything's been ticked off, and they've just taken a human out of the process and said any human will pay that claim. If there's nothing in there that's in any way controversial, we will pay it, and we will pay it immediately. So you literally just put it through a straight-through processing automation process that's allowing claims to be paid far more quickly, and from that there can only be a benefit to the consumer. I think there are other use cases where absolutely that sort of high-risk process will be undertaken. However, I don't really understand how it's any different than the process that we're going through right now. So when you look at an underwriter who takes on a health underwriting or a particular individual who's got a particular set of circumstances, they have to make decisions based on those circumstances, and some of those decisions are going to be beneficial to the customer and some of them may not be. I think I agree with Janthana. I think the systemic bias within underwriting is something that all regulators are concerned with, but we've been managing that over the last decades with things like gender bias and other biases which have been legislated for and regulated for within the underwriting and the claims processing. So I think as long as firms are looking at the controversial decisions, the decisions that need the human interaction, that need a little bit more big picture thinking before they're made, and the impact analysis is a little bit more human in its bias, I don't see there being a significant challenge. And I think most risk professionals like myself would probably look at firms and err them on the side of going for the basics first when automating and leaving the more complex decisions to a later date. And I think that's what we're seeing. I mean, even in the Lloyd's market, where you see a lot of bespoke products, a lot of bespoke processes, those who are trying to automate are saying, right, the commoditized, smaller premium products, they go through the pricing model. If the pricing model says no, we don't touch it. Once it gets above a certain premium value, then we'll humanly underwrite it and we'll make a decision. So I think that's the way the industry is moving. But yeah, I think the council is trying to make sure that we don't have computers saying no to things that humans might otherwise say yes to for very good reasons.
So one thing you already alluded to in your answer right now is that obviously, I mean, a lot of the issues that are being raised around potential problems that could arise due to automation are actually issues that we already have existing sectoral regulations around. We have existing regulations that deal with discrimination. We have existing regulations that deal with how to make sure that different sectors of the population get equal access to various kinds of services. And I think this touches on the other kind of broader discussion. Should AI be considered as a specific thing for which horizontal legislation is necessary that just focuses on the AI aspect of whatever it is, or should it actually just be a case of we have sectoral regulations and we're going to update those as necessary if AI actually brings something new to the table, which frankly often it doesn't. And a bit we're seeing that kind of the EU has taken the approach for the AI Act and to be clear, the AI Act is not meant to cover all aspects of AI. It's only meant to cover safety, security, and fundamental rights issues for individuals. Whereas in the UK, the current sense of the discussion is a preference to move to take a sort of sectoral-based kind of approach, and then to somehow coordinate between the sectoral regulators. I think one of the reasons for arguing to take a horizontal approach is to say, but then you get so many different regulators, and they all want to have a say about the same piece of process that you've got. In your experience, how many different regulators would you expect are going to want to point at the same piece of your system and say, well, you're not allowed to use this kind of data, or you're not allowed to use it in this kind of way from this perspective or from the other kind of perspective? Do you see a challenge arising from different regulators requiring different things for the same piece of work that you're doing?
I think, from the regulation perspective in the UK, in my line of business, we are regulated by the FCA. So they are all over the GDPR part. And also the ICO is also another, kind of regulator that kind of look into this. So I think between the two of them, we already have that horizontal and vertical oversight of the data privacy. Now, whether we need something in addition to that, I have no good answer, but I would say that there's no reason why we cannot just extend it existing GDPR regulations to cover like AI aspect, and then get either the FCA or ICO or both to kind of cover that gaps. Mm-hmm. Yeah.
Mm-hmm. I think it's a challenge, but then it's almost go back to your earlier statement. This is nothing we don't have already. When we look at automation, and let's call it what it is, automation or algorithmic speeding up of processes, we have all the regulations that we need right now. And when we look at AI, I think to a greater or lesser extent, actually a lot of people are thinking about something that's not here yet, and are worrying about something we don't have to worry about just yet, which is computers being able to make decisions that humans wouldn't make. Mm-hmm. And when we look back through, definitely my history within the financial services, one of the big changes that we had was really the regulation around the capital models and the internal models. And there was a lot of furore around, we need to make sure that these are not going to drop the allowance of capital within the financial system, and that the financial system will be sound, and that we'll all know what we're doing. Well, internal models are just basically Monte Carlo simulations of a bunch of calibrations that are made by human beings. Automation in the insurance industry right now is automating of processes that are currently done by human beings. And I think what we're looking at is a lot of regulators thinking, what's the next step that could come, which is automation and then machine learning and making different decisions that we would not have made previously that could lead to some sort of bias within the system that could be detrimental. And I don't think we're there yet. I think a lot of regulators have got a lot of different thoughts on that and how they're going to manage it. But I don't think anyone really knows what that's going to look like. I think some of the automation that we've seen historically, and I'm thinking, there's the classic example of the Microsoft chatbot that was put onto Twitter, and for anyone who's not aware, but within about 6 hours became a complete Nazi apparently. But the ability for machine learning to be abused or to go off at a tangent, I think has worried a lot of regulators, and I'm not sure that anyone's really implementing that type of technology yet, so I don't think it's necessarily on the horizon. From the question of how many regulators are going to get involved, I go back to exactly the same point of we're already there. I mean, if you're a global insurer, you have a college of supervisors that will get together and they'll all sit around the table and they'll all chip in with their own particular points of view, and you have to deal with them all. And, and then once they go their separate ways, they then have their all very, very different views, and they're very, very different regulations that you have to appeal with or to deal with in every single jurisdiction. So I don't think there's any difference, again, between dealing with technology and dealing with the number of regulators we have on a day-to-day basis anyway.
And then finally, I just wanted to reflect on the focus at the moment when it comes to thinking about potential new types of regulation that might be necessary for the use of AI has been very much on the impact on individuals. And the AI Act is doing a risk-based, but it's risk to individuals is the kind of driving factor. The ECB, when it was asked to give some comment on the AI Act, noted this also as one of the reasons why it actually doesn't really impact on them, because their role is to make sure that the sector is operating okay. Do you think that there should be more attention on the potential risk to the business that might arise from the use of AI systems that might perhaps not be as robust as initially advertised, or might trigger interactions between businesses that could cause problems in the financial sector? We've seen things like flash crashes and those kinds of things. Should business-to-business kind of risk from AI be higher on the agenda when thinking about the sort of regulation in this space? And obviously for you, mostly in the insurance sector.
I think people often forget that a lot of micro businesses in the UK, at least, are set up by entrepreneur, one-man band. So essentially, those are individual. But in the eyes of GDPR, they are classified as business because they are set up as a business for work purposes. And they need the same level of protections, which we currently kind of ignoring them. So I think there's certainly an element of redefine of what we consider business. Are we talking about 20 people employed minimum, or are we talking including individuals that are working on a consultancy basis using a company as well? Of course, the bigger the organization, the more resources they have. So they can certainly have more, they are more informed about the regulation, certainly, and they often will have dedicated department that deal with all of this regulation, which entrepreneur, individual may not. And their ability to protect themselves is also as good as any other consumer, individual consumer. So that is something that, we need to be thinking about from the classification of what should be included in that. The second part, whether we should have, I think I like the idea of having that B2B data available, because without it, I think a lot of automation that we could make will not happen yet. So it's accelerate the ability to be able to create better rule-based decision-making that would benefit the customer, which is the businesses. Yes.
It's an interesting one. I'm going to sound like I'm going to repeat a broken record in a minute, but we're already there. Systemic risk has been around for a while. It's interesting, regulators are sort of starting to really react to it now. I think, actually when you look at prudential regulators, they're starting to look at systemic risk. We see operational resilience is a big issue now within the financial world. And it's really regulators reacting to the fact that they have now got institutions where if you have one domino who falls over, the impact on them is immense throughout the system. But again, they're coming to the table a little bit too late. I mean, when you look at the amount of people who've now moved to the cloud, you've really got 3 or 4 big cloud providers globally. What would happen if AWS were no longer to be there tomorrow? There would be an immense systemic issue for quite a few firms. So I think there's the systemic issues of AI already there. You mentioned flash crashes. I mean, we've had dark pools of liquidity and trading algorithms in the banking sector and the investment banking, commercial banking for a long time. The regulators have not known how to deal with those since they were created, and they still don't. frankly. There's nothing to stop flash crashes from happening. The other interesting part of this is how automation in other industries is then going to affect insurance. And obviously at the moment there's a lot of discussion around autonomous driving and autonomous vehicles and autopilots and how do you insure autopilots, which is interesting because I think the regulators forget that we've been insuring planes that have got autopilots and pretty much can do without pilots from takeoff to landing, and we've been insuring them for decades. We've got ships that can pretty much manage their own way around the world and generally only crash when they're being piloted by a human being rather than by a machine. And we've been insuring those for decades. So, I think part of the challenge is that a lot of times the industries have already come up with solutions. And then the regulators come along behind and go, how do we manage to regulate the solutions that they've already implemented? And that provides additional challenges that weren't there at the start. I think if we could have a bit of a more cooperative and collaborative approach between industry and regulators at the start of these processes, we could build in and design in regulatory compliance when it arrives, not 10 years after we have to go back and retrospectively build in compliance. And I think that's what we've seen with GDPR. It's what we've seen with a lot of these regulations. Is we've already built solutions. We've already got cross-Atlantic data transfers, and then we have to go back and re-engineer them to comply with GDPR, etc. So, yeah, I think systemic risk is an issue, but I think the regulators have to look at what is already in place, and then how can we build on that and help firms develop that, rather than coming at it completely fresh.
Thank you very much. Do we have any questions from the audience? Okay. Yes, please go ahead.
Hi, thanks. I think related to that last question, do you think that regulation of AI holds AI to a higher standards than it holds humans? So maybe an example of that is if you have two underwriters looking at the same risk, they could underwrite it completely different ways, or judges handing down sentences for the same crime but completely different sentences. What are your thoughts on that?
Wow, that's a toughie. I mean, are we looking at AI differently to humans? I'm not sure necessarily we are. I think what we're looking at is regulators saying that we understand that there will always be a band of operation in which we expect any industry to operate. And we will pull aside those who operate a long way outside of that. I think, when you look at insurance company failures, it's usually down to one or two individuals who've gone outside the band of operations that they are expected to operate within. When you look at banking, you look at rogue traders, we know people make decisions, some of them lose, some of them win, some of them lose very badly, and some of them win very well. And then you have the real outliers, and that's where regulation steps in. And I think what the regulators are trying to do is to pick up the outliers and to pick up the AI that can really go off reservation and go off on a tangent and do real harm. And I don't think they're trying to necessarily hold it to a higher standard, but they're trying to work out the challenge with AI and the challenge with algorithmic trading and algorithmic decision making is it can go wrong so very, very quickly. If you have an underwriter whose underwriting is very poor, then you can pick that up and they may get 3 or 4 risks before you pick it up. If you've got good QA, they might get 1 or 2 risks on the books before you pick it up, and you can go back and talk to those clients and have that conversation. When you've got an algorithm or an AI or a machine learning environment, they could be putting 1,000 risks on the book before anyone's got time to even pick up that there's been an exception to an underwriting guideline. So I think it's the speed at which errors can occur that really worries the regulators rather than the standards.
I think also just to add to Rob's point, when it's come to unconscious bias, that process is very inherent in the human process and decision-making process, but it's not to the same extent to AI, because AI, when it comes to data bias is quite transparent. We can do something about it. There are certain sets of information that we can exclude from the model, whereas with human brain, we can't really do that. So I think in many ways, I would say that I rely much more on the AI, machine learning, to make decisions if I know that the data that we put for training is actually not inherent any type of bias, because I know that I probably will have better chance of being judged exactly the same as everyone else. I know that, for example, insurance data, we collect gender, data about gender, age, even race. This type of information should never really be included in the underwriting decision anyway, but it's still there, we're collecting them. So certainly, with AI, and if you remove all of this aspect, then I would be more comfortable of having AI making decisions than human. Yeah.
Go ahead.
Yeah, thank you. It's closely related to the previous question. I tend to disagree with you. Apologies. Yeah, but you say the protected classes are excluded, but we still have things like systemic bias and bias injected implicitly to other features in the data set and in the classes as well. So sometimes if someone's race, because it can be injected to another closely related feature, which is not necessarily race, but using that again can still produce unfair decisions or unfair output. So do you think it's, in your opinion, what are the challenges, or what do you think there should be like a new collection of data, maybe new production of data that is maybe less biased, because you're automating a process that was produced by maybe decision makers how many years ago, and maybe they are inherently biased. Do you think there is more to be done in terms of the creation of data itself from less biased decision makers? I don't know. Thank you.
I think certainly, like being aware of the data biases and what we can do to eliminate it. That's, like the first start. And the second start is to review it, to make sure that, on an ongoing basis, what we have put in there is actually generate the outcome, and that the outcome is also not biased. So I think we need to get to that point. And to your point around finding new data set that we can incorporate in the underwriting claim decisions, yes, certainly. And we are collecting them more and more. Social media data, is something that we are very keen on, in addition to all the other data out there. And over time, I think we can certainly using this to map out the behavior of individual customers, as opposed to group them into categories that could potentially be subject to biases.
It's probably a question that we could do a whole session on, to be honest. When you look at insurance and you look at underwriting, what you need to do is you need to work out what are the key data points that are going to move the underwriting premium. What are the key areas that are going to really challenge your claims? What are the key areas you need to think about your reserving processes? A lot of work's been done over the years to determine which ones really are viable, which ones are discriminatory, and which ones are not. And some of those have been removed for obvious purposes. The challenge you then have, though, is that actually when you look at AI, and we talk about proper AI now, we're talking about machine learning, not just automation of a process. I completely agree with you. Automating a bad process still gives bad results. That will never change. When you talk about machine learning and AI, what you do is you actually remove some of that unconscious human bias, and you look at the data in its purest form, and you tell me what is that data telling me, not what is my gut telling me. And I think data can be very useful in eliminating some bias. The challenge with that, though, and I'll give you an example of this, the challenge of that is that you can then play the game. and people will game the system, as they already do. If anyone's got a pet, anyone's got a dog, you will know that depending on what breed you put in the field when you go to get pet insurance will significantly depend on what the price is that you get. And not just the breed, but the specific type of breed. If you put a Labrador cross as opposed to a pure Labrador, you'll get a very different output at the end of your premium pricing. So algorithmic decision making can be very, very useful. The problem is people can learn the algorithm very quickly and then game the system. So bias is something that underwriters and insurers actually need, because there are some things you want to insure and there's some things you don't want to insure. It's built into some systems. But game theory, unfortunately, then plays the game as well. So just a very quick sort of analogy for that. But if you go and buy something on Amazon, you'll be offered an insurance at the end of that. Those insurance prices are updated about 20,000 times a second. Okay? All the insurers who offer insurance on Amazon have got masses and massive data, and they've got huge algorithms that are pitching that. Okay? The game theory that goes on behind the scenes is immense. They know what products they want to win. They know what products they want to lose on. And they are adjusting their pricing algorithms constantly to win on the good stuff and to never underwrite a 70-inch scratch screen TV. Okay? So whilst data and algorithms are fantastically good at protecting some biases, they also are allowing other biases to be enhanced. And that is a challenge that both consumers and the industry have got to face.
Okay, thank you very much. I think we are at time. So I thank you, the speakers. I thank the audience. And that's it. We're done.